Hello, good morning everyone. Today we are going to review how to use the trend or the slope of the market to define a trade setup even easier as the one we saw before. As we all know, we must buy when the market is going up and sell when the market is going down. So we should buy when the slope is positive and sell when the slope is negative. The problem is more of the time we decide that this is an upside slope and we buy late, and this is a downtrend and we finally sell at the wrong place. How can we avoid these differences between our decisions and what the market does? The main that we need is to have a well-defined method to measure the slope. The slope is the difference between the current value and a certain number of bars in the past of a parameter. The parameter can be the close, as an example, on this downtrend. This low of the bars are the close, and this bar has an up close. So if we draw a line between the closes of each bar, on this bar, this is the slope between the closes. When this bar starts, if we start an extended line from the close between this bar and this other bar, this is the close and this is the current close. The slope is positive, and then at the next bar, this is the current close, and this is the close of the current bar. So now we have a downtrend with a well-defined slope. At the next bar, we draw again a line between the previous close and the current close. We get again a negative slope, and we can keep doing the same bar by bar. Here we have another downtrend with even a bigger slope, and when the trend finishes between this close and the following close, we have a lower slope, and finally a trend change between this close and this other close. Now it is positive. If we trade when the trend changes, for example, we can enter on this open or the close of the previous bar, and when the slope is small enough, for example on this bar, then we should be out at the close or open of the following bar. If we decide to exit when the trend changes sign, then we have the exit at the close of this bar, near the open of the following bar. We are doing this procedure with the close of the bars, but we can do this with any parameter. For example, with a line, with an HMA. Let's see an example with an 18 bars HMA. I will use points instead of line so we can see the value of each bar. And now we do the same process. To calculate the slope, we look at the current bar with the following bar. This is a negative slope. It is a small value, but it is negative. At the following bar, we have a bigger negative slope. So at the end of this bar, we could be starting a short. But if we look with more detail, we keep on the downtrend until here. Between these 2 points, we have a positive slope. So that will be our exit position at the close of that bar. So our trade will be between these 2 points. If we decide to start the trade as soon the slope changes, even if it is small, then we can get 1 bar early. We must define which are the thresholds to enter the market to avoid areas where the market is horizontal and we may get noise. For example, between these 2 bars we have a negative slope, so we have a short, and then between these 2 points we have a small positive slope, so we have a buy. So we are going short at the close of that bar or the open of the next bar. And we close the position at the close of this bar or the open of the next. Something around here. This is a loss. We can also smooth this solution taking not the previous bar but certain number of bars in the past. For example, between this bar, instead of compare it with the value of the previous bar, we can go 2 bars into the past. For example, this is the slope on this bar. On this bar we have this slope, it is negative. 1 bar back we have this slope, so here we have a trend change. We can smooth it even more using 3 bars instead of 2, and this way the changes are even smoother. As we saw on the previous video, we can use the momentum indicator, which is included on Ninjatrader, to calculate the slopes. If we compare the current bar with the previous bar, we must use a period of 1. On input series, we put the line that we want to measure. On this case it is an HMA of 18, and we can make it to paint bars. So we get this histogram where the value of the histogram is the difference between current value and previous value. For example, on this point, the trend changes to the downside. This is looking at the current HMA minus the previous bar HMA. We can smooth that value, as we explained, looking 2 bars back instead of 1. If we go to 2, we are averaging the result in 2 bars. We can increase that number, and so we get an even smoother value. This is useful when the values obtained with 1 bar is too noisy. Like, for example, when instead of using the HMA, we look at the close. If instead of looking at the HMA, we look at the close, now we get, when we have a down bar, we have a negative slope. And here we have a big bar to the upside, so we have a big positive slope. But we get a lot of up, down, up, down. So we need to smooth those values. We can use an average, or we can follow the procedure of looking, instead of 1 bar back, looking 2 bars back, or even more. With 4 bars, on this point we have a trend change, but we still have some extra noisy signals. With 10 bars we get a more smooth price action. Each bar is the value of the close minus the close of 10 bars back. If we compare this with the HMA using 18 bars, we get this. This is the crossover point when the trend changes from negative to positive. So we should buy at this point and sell at this point. We can check this visually with the momentum indicator. We can use any average, and we'll look at any line, any variable of the price, or any line. For example, if we want to look at the HMA, I will add back the 18 bars HMA. And now I want to have the slope of that HMA. So we use again the momentum. Only one bar back, because I want to check the difference between current HMA and previous bar HMA. On the input series I put the line, an HMA of 18 bars, and the momentum in color red, so it matches the HMA line in bars format. So now we have the histogram for both lines, comparing the price 18 bars back, or comparing the HMA of 18 bars. As we can see, the signals on the HMA are faster. We can get long early. For the short, it is almost the same. And this small pullback is not detected on the using the price slope. The slope on the price remains negative, but the reversal to the upside is detected earlier on the HMA. As you can imagine, this procedure can be used for any line or any variable of the price. For example, instead of using the close, we can use the median, the open, the typical. Let's try with the median. The results are almost the same. And for the line, we can use any line. Another very fast line is the T3. Let's try with an 18 bars T3, and we can remove the smoothing, so we can make it faster with a smooth of 1. And now we can check the slope of that line, so we use again the momentum. Here we place the T3 with an 18 period, 1 for the smooth, in bars format in color blue. Only one bar back, and we get this blue histogram, which is very similar to the HMA. We don't have the delays as on the price. A little more noisy when there is no trend. And on this uptrend, the T3 is more stable than the HMA, but the price on this example worked better. It keep to the upside all the time. All these setups can be tested with the momentum indicator. It is included on Ninja. And if you want to automate them later, as usual, you can use the markers system. With markers we can use the slope indicator to check the slope of any line. Let's say that we are interested in the green histogram, the price between current bar and 18 bars back. On this case we use the slope indicator. The histogram that we get, we assign it a name, for example my slope. We can use that later. And here we place the line that we want to check. On this case we were using the median, not the close. And 18 bars back. We make it to paint markers, and we have a threshold. We talk about this later. The histogram at the bottom is the same histogram drawn by momentum at the top. I will minimize everything so we can see when it changes to positive, we have a positive, a triangle up, and here when it changes to negative, we get a down signal. On this example we have a little delay signal, same here, and finally an upside signal. If we want to automate those signals, we can use the markers. We only need to set what we want to buy. On this example we want to buy triangle ups and sell triangle downs. We can specify also the colors or leave it blank, so any triangle up is used for buy and any triangle down is used for shorts. The extra parameter on markers, the threshold, let's look at the histogram generated by markers. I will remove all these that are not used. We can see that the histogram is the same that the one drawn by momentum, but we have the threshold. I will make it bigger so we can see the colors. With the threshold we can define how big must be the slope to consider a trend change. For example, on here this small peak is 0.05. If we set a threshold of 0.06, then we set the threshold to 0.06, and now we can see that the up peak is not changing the trend. It remains in red. Only on we avoid this short signal because the slope was not enough big. Here we have an upside trend but lower than the threshold, another one but lower than the threshold, and only on this we have a signal. We can specify this not only on the indicator but also on markers filter. This is the threshold to paint signals. But we can also apply a filter on markers. We enable the filter and we can specify the name of a variable. For example, when we assigned the slope, we assigned it the name mySlope. That means that we can use that name on the filter, and for longs we want a mySlope with a minimum value of, for example, 0.07. For shorts, mySlope must have a maximum of minus 0.007. So only the signals where the slope has a slope lower than the threshold will fire a short. We can see the result of the filter at the upper right corner. So those signals will be ignored if the slope is not following the rules. Hope this method has been interesting for you. As you can see, the possibilities are infinite. We can use almost any indicator that we have available, and we can check its slope to be used to trigger signals and also to filter signals. Any questions or comment, please post below this video. Thank you everyone. Bye bye.